How to trade Bitcoin to maximize profit for beginners. There are many paths to profit. Every investor must have their own strategy to maximize profits from their Bitcoin investments. Depending on the needs, investment objectives, and character of the investor, is the type of investor aggressive or relaxed. For those of you who have just started investing in Bitcoin, there are several ways of trading Bitcoin that you can try to maximize profits. Use long-term strategy. The price of Bitcoin, and other crypto assets in general, can rise and fall significantly on a daily basis. For some novice investors, the volatile Bitcoin price movements can sometimes cause panic. They then rush to sell Bitcoin when it is down, for fear that the price will fall even more, resulting in losses. In fact, if you want to wait a little longer, it is possible that the price of Bitcoin will rise higher. Historically, you can see that Bitcoin's price movement in the long term tends to go up. So, you are not easily hysterical when the price drops. This is why Bitcoin is often used as an investment for the long term. It is important to do some research on your investment choice. So, you can better understand the character of an investment instrument, what are the factors that influence the rise or fall of prices, and what the potential will be in the future. Focus on big crypto, divide into small crypto. One strategy you can try is to sell the profit from your Bitcoin to a coin of lesser value. This can be done as an effort to diversify assets, so that when one cryptocurrency decreases in value, your other assets can still be saved. Keep the majority of your investment in Bitcoin. Then, you can divide the profits from your Bitcoin investment into several other coins that are less valuable. For example, you buy one Bitcoin. 6 months later, the value rose to 1.5 BTC. Now, you have 0.5 BTC profit. You can save 0.3 BTC earlier, then invest the remaining 0.2 BTC in a stablecoin or ICO. Stablecoins are crypto assets designed to have the same value as conventional assets such as gold or US dollars. This is done to maintain price stability, so it is not too volatile when compared to crypto assets in general. Some examples of stablecoins that have a fairly good reputation are the USD coin, USDC. While ICO, initial coin offering, is when a new coin is launched for the first time, and can be purchased by the public. However, you need to be more careful in choosing an ICO. Learn all the important things about the ICO. Who is the development team, what is the roadmap like, the potential for adoption in the next few years, and the application of the technology. Avoid ICOs that are made just to go viral, but whose function is not clear, so you don't lose in the future. One of the most successful ICOs is Ether. When Ethereum first released it, the price of Ether was around $0.31 US. In April 2022, 1 Ether has been traded at $3,094 US, or around Rp 44 million. With these numbers, investors who buy Ether during the ICO, of course, get a very profitable ROI. Buy a little but regularly. Not only selling, you can also set a strategy so that buying Bitcoin can be more profitable, especially in long-term investments. One of them uses the dollar cost averaging, DCA, method. This DCA is a method where you buy Bitcoin bit by bit on a regular basis. For example, say you have an investment fund of $50 US. Instead of buying Bitcoin all at once, you can split it into $5 every week. Because the price of Bitcoin is volatile, it may be that in the first week you get a low price, the next week it is higher, but in the next week the price of Bitcoin you get is even lower. So when calculated as a whole, your IDR 50,000 investment each week can be more profitable than $50 at one time. To use this DCA method, we recommend that you choose a crypto exchange platform that supports the repeat buy feature or regular purchases.